There's a link that's existed now for about 7 years between the crude oil, the petroleum price, and the vegetable oil price. And crude oil is at the bottom and palm oil trades in a band above crude oil. What we have seen in the last few weeks is a big drop in the crude oil price. And the reason is a fundamental one. A lot of extra crude oil production, especially in the United States, and that is weighing down on the crude oil market. So my personal feeling is the crude oil price outlook is bearish. I'm not sure yet very bearish, but there is a steady oversupply of crude oil coming onto the market. And palm cannot escape from crude oil. In the short run, I think the palm price may strengthen a very little because we're in the period next 6 months when stocks come down traditionally because production slows. That may help to support palm a bit, but after maybe 5-6 months, my expectation is palm will come closer again to crude oil, and in the background, as I've just said, a lot of US supply, I think, is going to put downward pressure on the crude oil price. The effect of export taxes is mainly not in CPO, it's in refined oil, in oleochemicals, in biodiesel. A big export tax, which is what they have in Indonesia, it's bigger than in Malaysia, gives their processor cheaper raw material. The local price is a long way below the world price. So the export tax difference has really helped the Indonesian refining industry. Indonesia now exports refined oil on a larger scale than Malaysia. Indonesia is the biggest exporter of biodiesel, and Indonesia will soon overtake Malaysia in both fatty acid and fatty alcohol production. So export taxes have helped a lot in the downstream products, and that has pushed more of the CPO export actually into Malaysia. So Indonesia has gone more downstream, value added. What you find is that there are 1 or 2 markets. The best example is India, where their imports are very flexible. They can switch between palm oil and mainly soybean oil and sunflower oil. When the gap is wide, India can import nearly 90% of its oil, and it's the world's biggest importer of oil. It can import nearly 90% as palm oil. When the gap is very close, India maybe only imports 65%, 70% as palm oil. So a low gap, like we've had recently, means that India switches some imports out of palm oil into soft oils like soybean and sunflower.